It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, September 13th, 2016. Cruising our way through this third week of the month of September. Hope you guys are having a great quadruple witching. Boy, we had a great day with all of our students today. These markets are looking great ahead of Wednesday's trading session. Crude oil is trading inside of a wedge, S&P in a bearish range. Gold just finished off its measured move, and the euro finally tested below the range we talked about from last night's newsletter. Boy, I got a great newsletter in store for you guys tonight. Plenty of reliable trading opportunities setting up for tomorrow. Before we get into charts tonight, I do want to remind you the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of this YouTube video. Follow that link and come join me here on the blog at Sideways Markets. While you're here, don't forget to join the mailing list. Upper left-hand corner, make sure you give me your name and your email address, and I'll send you an email every evening when our nightly newsletter goes live. Don't forget to download all the charts. You can download those charts below the video tonight and have them ready on your computer for tomorrow's session. Grab your free pass in the upper right-hand corner of the blog. Grab your free pass and come out and join me as a guest this week or next week as a guest in our trade room. And of course, as I always remind you, you're going to learn more from me in my 1-week trial than you will anywhere else on the interwebs. Learn more about why we are considered the industry standard in futures trading education. Grab that free trial on the right-hand side of the website. And, of course, don't forget, we're always here to help you guys out with any questions. Use that live support button on the right-hand side of the website. Hope you guys are having a great day here so far. Man, what a great day it was. But we got another big day coming tomorrow. Tomorrow's Wednesday, September 14th. We got no major news coming out of the Asian session here tonight. We're going to head into the London session tomorrow morning. We got a lot of different news here. 4 o'clock, 4:30, and 5 a.m. tomorrow, right? The meat and potatoes here will be coming at 5 a.m. tomorrow morning from the EU. Industrial production there at 5 a.m. But we do have news from Italy, followed by Great Britain, and of course the ECB tomorrow morning at 5 a.m. 4 o'clock, 4:30, and 5 a.m. If you're going to be hanging out with us tomorrow morning in our chat room for the London trading session, which of course starts at 3 a.m. Eastern time, don't forget you got some big news on the store for tomorrow. Tomorrow in the U.S. session, which of course is right on here, we got 8:30 a.m. the import and export prices. That's a minor news report. We get the big news tomorrow morning at 10:30 a.m. with that petroleum status report. Just a heads up, don't forget inventory day tomorrow. It is a hump day. It is a Wednesday. That means crude oil and the S&P 500. You know, crude's the little shadow, or should I say the S&P is the shadow of crude. It may break free a little bit tomorrow. We'll have to see what it looks like. But typically over the last few months here, Wednesday's inventory report on crude oil has had a lingering effect on the S&P 500. We'll be watching this market live in real time tomorrow morning with all of our students in our trade room. But what we know is tomorrow after 10:15 a.m. Eastern time, that's when we cut it off ahead of that news, and we'll wait for that news to come and go. Around 10:40 a.m. tomorrow morning, we'll start getting back on the horse and looking for more opportunities tomorrow after that inventory report comes out. Tomorrow night, we get some news from our friends down under, right? The Kiwis and, of course, the Aussies there. We got 6:45 and 9:30 p.m. We'll talk about that in tomorrow night's newsletter, but in case I don't see you before that happens, right, 6:45 and, of course, 9:30 p.m. tomorrow. So big news tomorrow morning is going to be a plethora of news reports we see tomorrow morning in the London session. If you're going to be with us in the chat room or in the trade room tomorrow for the U.S. morning session, we get the import-export prices and, of course, the big news tomorrow for the crude traders being the inventory report. The cutoff is 10:15 tomorrow morning if you're trading oil, and don't forget the S&P has been the shadow for crude oil over the past few months. So make sure you focus on that again tomorrow around 10:30 a.m. Eastern time. Come join us in the trade room. It opens up at 8 o'clock Eastern time tomorrow, and we'll do it all together with you. Let's go crude, S&P, gold, and we'll wrap it up with the euro tonight. Crude is bearish and trading at the highs of a wedge this evening as it tries to finish off the move back to Monday's low at 44.72. We talked about this. If they couldn't hold this up from Monday, it was going to go right back to that low. That 44.72 Monday's low is so close you can almost taste it. But we get a bearish wedge, we know that sellers are going to be selling off the highs and will need to avoid selling into the low of this wedge, while the buyers will be aggressively trying to call bottoms, buying off the lows, looking for moves back to the highs tomorrow. Most reliable way to sell this market right now will be waiting for opportunities up at resistance levels and look for moves back to the lows with an ultimate target at 44.72, 44.59, the measured move, and of course that wedge target at 44.26. Most obvious thing right now is that we are hunting for Monday's low, right? After, and again, we talked about this in last night's newsletter, right? We were kind of daring those buyers to keep it above that gap, right, which we talked about last night. They couldn't keep it. Selling opportunities off the gap. It was a very, very good session for the bears today if you had the plan put together from last night's newsletter. Now, with that said, first thing we see here is this wedge. We're not quite getting a bear channel. It is a bear wedge, and really the wedge is very similar to a channel, but there's a couple differences to it. First of all, in a bear wedge, my focus is always selling the high of that wedge. I also want to be careful as we start getting down towards the kind of the narrowing point of this wedge. It starts to get really, really important that we don't try to sell near the low of that wedge. This is where it gets really challenging, because if you miss the sell off the high, you only have a small amount of space below the high before you run right into that low. And that's probably going to be a real big pain in the rear tomorrow for all the bears. And of course, the final component of a wedge is the 44.26, right? This is the kind of the wedge vertex. This is where those trend lines collide, right? Where they come together. That's going to be the ultimate target here, at least in the medium term. In the short term target, it's going to be the Monday's low. Then of course the measured move. Then of course kind of the medium term target will be that wedge low at 44.26. Right now, sellers are trying to dig their heels in here, selling up at resistance areas. You know, a lot of times when you see a market that's doing this, you can see it once, twice, 3 times, 4 times. Yeah, that tells me right now that buyers likely bought this pullback, right, or likely bought that trap low and are now starting to make an attempt to call a bottom here. I'm not going to go as far as to say that bottom is in just yet, because this is a bear market until proven otherwise. But this definitely leads me to believe, right, these 4 lows here right now leads me to believe here this may be forming into a trading range. The S&P is another example of that. We'll take a look at that in just a moment. Right now, if you're a seller right now, your objective, right, or your job tomorrow is to be looking for selling opportunities off the high of this bear channel. If you're a seller, you really would love to get opportunities up around this 45.33 and up around this battle zone from 45.45 up to that 45.61. So up we go, buyer failure, and then right back down into the battle zone, buyer failure, and then right back down. All of those will be opportunities selling the high of the wedge, and of course selling the high of this range. The hard part is going to be is that if this thing now slips down into it, we don't want to sell the low of that wedge. We want to keep waiting to sell the high of the wedge, we want to keep selling high and avoid, right, those traps of selling low. Now, what if you're a buyer right now? Well, first of all, if you're a bull, we know that that's not going to be where the most reliable trades are going to come from right now, right? But buyers are going to be trying to scoop up bargains buying the low of this wedge. Now, the best way to do it, if you're going to be a buyer tomorrow, will be to look for what we call a double overshoot. One overshoot, twice overshoot, lower low, separation and significance, and then that will be, again, I'm not going to try to make a point. I'm not trying to make a claim that buying this is going to be a reliable opportunity right now. But if you did want to be a bull on this, that would be the most reliable way to do it. Would be a double test of the breakout of that wedge, look for seller failure, and then buying back in. But again, you got to remember at that point, sellers will be likely trying to come in and sell the high of that wedge. As high as this market goes, we can assume that sellers will be waiting. So sellers looking to sell the high of the wedge, sellers looking to sell the high of the range. The high of the range will definitely be the most enticing, because that, of course, as you can see here, thanks to the API report, right, jump up, buyer failure, right back down. This is really where right, the professional sellers would love to sink their teeth into this market here right now, selling off the high rather than selling off the low. And again, if you're a buyer right now, your only options are to really dig into the low of this wedge, or I'm not going to say that we couldn't get a real strong move higher here. Tomorrow is inventory day. Real strong move higher, blow right through the battle zone here at 45.61. Buyers hold that pullback, right? And we may see the buyers make a run for that high. Tomorrow's a news day, so anything can really happen. So buyers either try to buy into that low of the wedge or get yourself a nice strong, the key word here is going to be strong breakout, hold that pullback, and then look for that two-legged move, right? That measured leg up to retest the highs tomorrow. If you're going to be a buyer, though, at least with the price going higher, we got to see some strength right to the upside to deter those sellers from jumping all over this thing, because you can assume that sellers will be looking for opportunities up around this area. I know that's where I'll be looking tomorrow, right, for that nice opportunity to get back down to that low. Stay away from the lows right now, though, if you're a bear. That's going to be the hardest part here tomorrow, is as this thing starts to get narrower and narrower, staying away from selling into that low. It's always difficult as this thing gets narrower and narrower. Sell high, don't sell low. If you're a buyer, like I said before, be careful. The only reliable opportunity here right now will be if you can get a real strong break higher here, really get and show us you guys mean it here above that battle zone and hold that pullback. You don't have to trade this market alone tomorrow. Don't forget, we'll be in the trade room tomorrow morning, trade room chat room tomorrow morning with all of our students, trading crude live in real time. How about some S&P? S&P looking somewhat similar here. S&P is bearish and trading at the lows of a range this evening, which means the bulls are buying off the lows with a target back to the range highs, and sellers are waiting patiently right now to get their shot at higher prices for a move back to the lows tomorrow. Buyers are likely already in this move coming off the lows, and the window of opportunity for these bulls is closing quickly to get in at what appears to be, at least in the short term, a possible short-term bottom right now. Sellers need to stay patient and wait for either a move back to resistance or a strong breakout below the range, right, to sell a pullback with a target down at that 2107 low from Monday. We talked about this one last night as well, right? Talked about this one. It's been a wild ride on the S&P, right? The sellers, of course, now trying to sink their teeth into this thing and get this market to come back down to that low. What a wild ride this thing has been on. We talked about this last night. It was going to take a real strong move down to get those sellers to commit to this, and they definitely got it. They got that strong move down, held the pullback in the Roth. Once we got this yesterday, or this morning, right, almost yesterday, where it seems it was a day ago, right, but once we saw them hold that pullback, you knew this was on, right, you knew it was on, and you knew there was a likely chance here that the next 24 to 36 hours we'd be talking about that Monday's low again at 2107. We talked about this in last night's newsletter. We went as far enough in last night's newsletter to look at that big bear candle and talk about how those bulls needed to put up or shut up there, right, or else those bears were going to try to double this thing up. And now all of a sudden, boy, these bears are licking their chops right now, right? There's that 2062, 2061 half area that's just begging for that double down off the highs to, or at least later on this week, right? Probably not tomorrow, right? But later on this week, this is going to be an interesting week here for S&P bears. This is what all those perma bears have been talking about, right, for the last 6 months as we kept pounding those highs again. Now, back up for a second, trade what you see, right? Trade what you see, not what we think. And what we see right now is we see a bear spiking channel, right? That bear spiking channel trapped high. Remember, when it comes to a bear spiking channel, that's all we really know we're going to get. We don't know we're going to get a big correction zone test, which would have been all the way back to the high. All we look for with a spiking channel really is trap high, trap high, trap high. And of course, that trap high was the first real nice selling opportunity here of this morning's session, right? Coming out of that bear spiking channel. Once we saw them hold the pullback, though, we knew the bears were in control, right? First time, though, we pulled back to the moving average, a trap high. That was a gorgeous, gorgeous buy failure above the moving average. And, of course, right, trap high for those bears. They run it back down to those lows in what is very, very telling. And we saw this on crude oil, right? Remember on crude how I said how it just really didn't show a lot of strength through those lows?